Many of America's CEOs have been vocal supporters of a trade deal with China. Joining us right now to talk about the CEO push for trade and the challenges for executives in 2020. Rich Lester is here. He's the CEO of Boston Consulting Group, and it's always nice to see you and have you here at the table in person. Help us understand, you spend a lot of time with CEOs in the room, in the boardrooms, as they've been thinking about some of these trade issues. We now have a phase one, or don't, well, we'll see, deal. What happens next?
Well, that's always the question these days, right? I mean, geopolitical uncertainty is what CEOs have found really challenging to navigate. It's been an encouraging month with USMCA looking like it's getting close with some de-escalation in China, but it's not solved for the long term.
Have you effectively told executive CEOs and others in the business world effectively get out of China? I mean,
no.
Move your supply chains, really sort of push out, or no?
No.
Because?
Because in the long term, China is the second biggest on the path to be the largest economy in the world. But what we have talked about all the time, and not just related to China, is the ability to build more diversified supply chains is extremely important. And the change in cost structures, the ability, the role of labor arbitrage going down, you can build much more global supply chains than you have before. And we see that coming around the world. That will affect China. More of its demand will come from inside China, but it will also affect supply chains beyond that.
Where are you suggesting people go?
We're suggesting, it's so different by industry. What we're suggesting is look at supply chains, both from getting closer to market, being able to react more quickly to customer demand and need, leverage technology and particularly AI to optimize the flows and manage risks at different levels. Risks related to climate. We saw floods a few years ago in Thailand, risks related to geopolitics, and think much more carefully, not just of optimizing a supply chain for one scenario, but having an adaptive supply chain across multiple scenarios.
Right. Given, we were talking about the impeachment before, and the markets don't appear to be moving on any of this news, how do you think CEOs are thinking about capital spending and how the election may or may not play into all of this in 2020?
I think right now there's actually more optimism around the economy. I think you saw in some of the numbers you were sharing this morning. Most CEOs look at 2020, I believe, not in an exuberant way, not expecting growth to blow out what we had this year, but not with a recession mindset either. And I think most of them are looking forward to some optimism around them. Of course, there's uncertainty around the election. It's a year away, and what that will mean in 2021. I would actually say the mood when I talk to CEOs has been more positive than the news. It varies by industry than when you read the press every day.
How prescient are CEOs? Have they seen other recessions coming? Have they seen crashes coming? I'm guessing they're not as counterintuitive as investors generally tend to be. But what?
No, but I would agree with that. I think there have been things, but on the other hand, I think there's been a lot of talk over 7 or 8 years about how the next year's the recession, next year's going to be tough. Every year it's and I think CEOs staying generally confident and believing that there was opportunity in the economy has generally served them well. Of course, it varies by sector. Different sectors are challenged. I actually find right now a lot of the discussion is not so much about near-term outlook and more about what do you need to build to win in the decade ahead.
Well, that's what we were talking about earlier this morning, just investments that CEOs have to make right now. It seems like you can go through just about every industry. We were talking FedEx and shipping and UPS, exactly. What they need to be investing, what cable companies or digital companies need to be investing at this point. You can look through just about every industry and locate places where they really need to be putting in some big spend right now. You think 2020 is going to be a year of investment?
I think 2020 will be a year of investment, but I think there are 3 themes right now that are underneath the medium-term outlook. One is AI at scale, that in every business, not just in the tech sector, people are recognizing that you actually have to invest to not just do nice pilot trials with data and technology, but to actually translate it into core processes, the offerings you bring to customers, the relationships you build, the supply chains you operate. And that requires investment in technology, also requires investment in human capital, upskilling, new ways of working. 2 is building bionic companies. How do you combine machines and people? We've done a lot of work around the world with leading companies on how they introduce AI and technology. almost always, when you combine people and technology, you get to better answers than technology can alone. And so how do you actually make that work about technology and data platforms, but also human capital? And then the third is about dealing in a world where you need to build both societal value and shareholder value, particularly with the climate challenge.
Can I ask you a question, though, in terms of manufacturing, and this was sort of going back to the supply chain issue. How often are you telling boards to move your supply chain back to the United States? I get the argument about diversifying outside of China. That makes sense to me. My question is actually whether you think it's really ever coming back here, politically or otherwise.
I actually think, first of all, we've been saying for 6 or 7 years there were opportunities to bring manufacturing back to the U.S. from a cost point of view and from a value of the supply chain. So it's not a new theme for us to believe there's opportunity here. I think the challenge we've got is a workforce challenge more than a cost challenge to be able to hire people to, I mean, look at the employment situation. So I do believe there's a chance for manufacturing to come back from a supply chain logic, a cost logic. You need to get the people to be able to do it.
Final question. Your competitor, McKinsey, is getting beaten up in the press a lot lately for its role in relationships with different countries and different issues that have been on, we'll call them edge cases. Is this affecting you in either a good way or a bad way, in terms of hiring, in terms of your ability to do business?
So mainly when we look at the scrutiny that other companies in our industry and beyond get, it just reinforces for us what we talk about all the time, long before this happened, which is we have a responsibility to the world and the way we operate and everything we do, and it's built on 4 pillars. Values translated into policy, clear purpose that people understand and feel they can act on, transparency so that even the most sensitive issues come up, and a culture of humility and respecting the world in which we operate. And we tend to use what we see going on to reinforce those pillars.